Hey, what's up everybody? Today I'm going to be breaking down 3 different trades that we took all on SPY today, all hit for over 20% profits. Today I made $186 or 8.49% gain on the $1,000 account challenge. For those of you who don't know, I'm taking $1,000 and I've been day trading options to see how far I can grow this account. We are now at day 23 and we are up in the account $2,386 total portfolio value. So where did we place our trades and what was going on this morning? We're going to focus strictly on SPY. That's where all 3 trades were placed. I'm going to move this to the 5-minute time frame so we can get an idea of what was going on in the pre-market that led us to taking the trades that we took. So SPY had a gap down this morning. This green line indicates the previous day's closing price. It's way up there. SPY opened up way down here. So if we're looking at this on the daily chart time frame, we know that SPY has been in a channel that almost looks like a bull flag, right? And the trend has been these dips down like this have been bought up. Dip down has been bought up. Dip down last week started to get bought up. But when we gap down this morning, that kind of invalidates that trend, because we're not following through on the buyback up. So my thought process this morning with the gap down day was, if we get an opening rally that gets sold, we will look to take it short. This was posted for you in the alert room. I said on gap down days, remember the ideal scenario is an opening rally to relieve some of the selling pressure that gets sold to bring things lower. That will be the number one scenario that we're looking for today. So we're going to flip this now to the 1-minute time frame. Here was our scenario. Opening rally, right? Higher lows, higher high, higher low, higher high. That gets sold to bring things lower. So what I said when we first got this drop down, so we get a trend line break, right? That's kind of our confirmation. Then we get a break of the pre-market lows at 403. That's going to be another confirmation. Off the day trade watch list, we have SPY short below 403. So what I tell everybody when we get that type of move, we're looking for the low of day on SPY, then short the rally. No entry yet. And I'm posting this in real time. Opening rally that gets sold. Wait for the trend line. We want to see a breakdown a little bit further. We want to see that confirmation. We want to get that low of day drop. Short the next rally SPY at 9:48 a.m. So we're going to timestamp this and match it up. So 9:48 a.m. right here, I said short the next rally on SPY. Here's your very next rally right here. This is it. Get ready for the entry. 9:49, same minute. Took entry short. I give you the contracts. I give you the fill price. I give you the exact stop loss. 403.6, timestamped. 403.6 right here. Why would I say 403.6 as a stop? So this was our entry point. 403.6 is the stop. Why does it make sense to place 403.6 as a stop? Well, if we're drawing the same trend line across the tops of the candles, like how we did over here for the bottoms of the candles, we'll see we've got a high, lower high, lower high, lower high, lower high, lower high, and then right here, 403.6, lower high. This also is where VWAP is. That's going to be that purple band. So I'm kind of going off of VWAP at this time. That's when VWAP starts to get a little bit relevant. I'm also going off of the downtrend trend line break strategy. I teach that in another YouTube video. So we get the confirmation move down, right? We've got the break of the low of day. We've got the break of the upward trend line. We've got this opening rally getting sold. We are going to go short on this very first entry or rally, and that's exactly what we did. Stop loss was placed at 403.6. We get the move down into the low of day, and we close the position. No need to hold it. We hit 20% on our contracts. Then we start to get a rally back up, right? So I tell you that's 20%. Entry was 129, 155, out at 155 for 20%. Then I say patience here to see what happens next at 9:52. So we're going to timestamp that. So we get a green candle up, patience, right? We're going to see what happens next. Another green candle up, and then that same level starting to reject, 403.6. And this is the first rally following this breakdown from the upward trend line. So then we can start to connect what? The peak to the very next rally. And so it's going to look something like that, okay? But we'll get to that in just a second. If SPY rejects here, 954, we can go back in short. Stop loss will be the same. 955 took re-entry short with a 130 fill. So we almost get the same exact fill on the same exact contracts over here. I stayed a little patient here to make sure that this was rejecting first prior to taking my entry. So we get our entry on this candle for the move back down to the low of day, close for 20% profits. Very next trade, we get the rally up. Now we're below the trigger level. Now we get that low of day move, right? Now we have proper confirmation. Short idea on SPY. Remember, off the day trade watch list, short idea on SPY below $403. Here's 403 right there. We've already got our trend line drawn. We get a rally back up, and I really wanted to take the entry up here. I did. I truly did. But I wanted to stay patient as well because, like I said, if we are drawing a trend line across the tops of these candles, it looks like SPY could be breaking this trend line and starting to move back up, right? So I did not want to be going short up here on green candles if this was a trend break and this started to rally. So I waited till we started to see some red candles, and I didn't get the best fill here. I got here, let me timestamp it for you so we can see. I said, keep eyes on this. We can do another trade here. Patience, right? No position now. I'm reminding you that this upward trend line is there on SPY. Be careful, be mindful of that upward trend line. And then I took the entry short, and I said I took a smaller entry, and I did 152 fill, and that was just to mitigate risk this time. I'm already up 20% on 2 green trades with a pretty decent gain on the day. Why would I go back in on something risky with more capital and risk those profits or risk turning a green day to a red day? So I didn't mind going in with a smaller size to mitigate risk. That's going to be at 10:08 a.m., which is right here on this candle. So as SPY rallied up and rejected 403 and started to come down, we go short here, and I paper-handed this. I'll be totally honest. I paper-handed this. I sold here because it was close to low of day, much like I did over here, but I did not get 20% on those contracts. I think I got closer to like 12 or 13%, but then the drop further did push those contracts over 20%. All right, so that's nonetheless, I'm very happy with the profits, but that's 3 for 3 trades, back to back to back, exact entries, exact exits, exact stop loss placement, fill prices, contracts given, trade ideas, all of that posted for you. And it all stems off of one thing. On gap down days, the ideal scenario is to look for the opening rally to relieve that selling pressure that then gets sold to bring things lower. And that started with the break of this upward trend line. Thank you for your time. I hope that the videos helped you out. Press that like button for me. Subscribe to the channel if you haven't done so already. And we're going to keep grinding on this $1,000 account challenge. Take care and enjoy your day.